go directly. So day trading strategy that I use, Charlie Burton from Ezeetrader.
Right, thanks, Simon. I'm not going to do an introduction. Simon, is that okay? Should I just go straight in, or should I do an introduction?
Well, people will know all of your. I mean, Charlie, you featured on the BBC. You're no stranger to publicity. Probably everybody will know, but just in case anybody doesn't know,
okay.
Ezeetrader is a trading, training and education business where you offer live trading support and mentoring. A number of services really, but you do together with your partner Kim Watson with the live trading rooms. So lots of experience. I think about 2002 was it that you sort of founded the business. So many years and many happy clients who I know have stuck with you for many years as well. So it all works, which is great.
Yeah, it's interesting actually. It's like you say, it's been many years, and people often. I'll just do this as an introduction. I was in my gym this morning, and I bumped into one of our clients actually, who lives locally, and he's a businessman, and he's got various businesses, and he said to me, do you know what? He said, I know you've always talked about how you got, well, not into trading, but how you got into the trader education side of things because you were bored from just sitting in front of your screens on your own. He said, I totally get it now. He said, because I've got all these businesses. He said, some of my businesses I'm winding down. He said, and I've realized I've started to crave interaction. He said, and I can totally understand where you're coming from in that regard. And it's so true that trading is a lonely business, and that unless you've got other things going on, then it can be quite very much an occupation of solitude. So yeah, it's important for people to have interaction because we all need that in our lives as well. But yes, so I get my little bits of interaction by coming along and doing things like today as well. And I'm name dropping here, but I'm doing a presentation with Mervyn King, the ex-Bank of England head honcho, just in a couple of weeks' time. So I don't know how I've managed to get onto that one, but
Wow.
But all those sorts of things, they give you a little bit of diversity to be able to be invited to do these various things. Now, the presentation I'm going to be doing with you today, I have actually given before, so I gave it in the summer, but bear in mind, I literally got home at 3 AM yesterday morning, and I haven't stopped since. So this is a similar presentation to one I've given previously, but the day trading strategy I'm going to share with people here this afternoon is something that it's one of many day trading strategies that I employ. And if you don't already know, I did a trading challenge to turn a $10,000 account into $100,000 a couple of years or so ago, and completed it last year. And this year I've started a new trading challenge to try and turn a $50,000 pound account into 500,000. So I've just started that a couple of months ago. And I'll be doing an update in the next month or two. I think I'll do the next update on that. But this strategy is just one of those strategies that I use within my trading, within the accounts, within that trading challenge account. So it's not just any old strategy, it's what I use. It's one of many, but it's one of many strategies that I employ. So and it's absolutely one of which that I will trade on that account that I'm doing the challenges on. Okay, right. So I guess I better get on and show people the strategy. If I can, I'll hold on a second. Just right. Okay. So I'm going to go straight into this. So what I'll do is I'll take questions at the end. But by all means, you can type questions as we go along, but I can't always answer them as we go along because sometimes it's better to just handle any questions that we have at the end. But here goes. So I'm going to give you the parameters for the setup first of all, and then I'll show you the visuals of what this setup is. So this is an intraday setup where you're trading the short-term price momentum. So basically, you're just trading with the run that a market may be having. So what we're normally looking at is a fairly fast running market whereby the price bars are having a good run in one direction, whether it be up or down. And we're looking for price to be moving higher on the 5-minute chart, obviously the 15, the 30, and the 60-minute chart. So I'm looking at a multitude of time frames here. So time frame analysis is always really important to me. I'm not a trader who trades off of a singular time frame and just trades a strategy around that time frame. I think it's important to be able to take a top-down approach and to see what's going on in the bigger picture, because sometimes you could be fixated on something like a 5-minute chart and not be aware that you're just about to buy on the 5-minute chart when maybe it's hit key resistance on an hourly time frame or whatever. So I think it's important to have that top-down approach so that you're aware of all of what's going on in the higher time frames. So the first indicator I use, actually pretty much the only indicator that we're using for this particular strategy, is an RSI, and actually I have it set to a 6-period setting. Now the standard sort of setting for an RSI indicator, as we all know, is either a 14 period is usually the standard sort of setting for an RSI. Some people use a 21. So this is a very short period setting that we have for the RSI, and there's a specific reason for that. What I'm not looking at the longer picture, which an RSI 14 period may tell me. It's all about the faster moves that we might see on an intraday basis, and that's why I'm using a 6-period setting. I've used a 6-period setting RSI for probably 15 years now, so it's not like something that I've just plucked out of the sky. I've used it for a long period. And so what we're looking at, if you think of an RSI indicator, it will traditionally, actually let me bring up a chart so you can have a look. An RSI indicator, I've got a chart here with it doesn't matter what the market is at the moment, but and I've got some volume down at the bottom, and here's the RSI with the blue wiggly line in. And I've put 2 red lines on. I always have them set on my charts. The upper red line is 90 on the scale here, because RSI runs between 0 and 100. So I have 2 red lines, one at 90 and one at 10. Okay, one at 90 and one at 10. And when the RSI goes above 90, it's telling me that the market might be getting potentially short-term stretch, but it's also telling me something else, that actually there's a lot of strength in that market. And likewise, when the market gets below 10, then it's telling me that it could be getting stretched again, but again that there's a lot of strength to the downside there. So that's what an RSI looks like. If you're not used to seeing what an RSI indicator is, very easy. Any charting software will have an RSI on it. All you'd have to do is change the setting. I have mine set there, and I have those 2 lines set. So visually, I can just see when it goes above 90 or below 10. Now, some people may, depending on the software you use, you may not have the ability to draw these lines on. Doesn't really matter. I just have them on because it makes it easier. So you don't have to have them drawn on if your software doesn't allow it. Okay, so firstly, the scenario that I'm giving you here today is a buy setup scenario. So it's a long example. So obviously we can flip it and look at short trading opportunities as well. But just for the purposes of this exercise, I'm just going to give you this one. So you're looking for a reading of over 990 on the RSI. So RSI's got to go above 90, and then that's telling me something. It's telling me that the market has had a really good run, but it might still want to go higher again if we can get a pullback. So we're then looking for a pullback in price to get long. So firstly, the RSI has gone above 90, just on a 5-minute chart this is. So this is on a 5-minute chart. Now I'll talk a bit further down the line about other time frames you can use it on, because you can actually use it on any time frame. But on a 5-minute chart, we'll use that initially. The RSI has gone above 90. Then you get a pullback in price. and then you get long. So we're looking for a pullback to just some short-term support. So the market might be having a nice run. We're going to show you some visuals in a second, and then it does a short shallow pullback. That's all we're looking for, to then use that as an opportunity to get long. Target the prior closing high and then manage out, I've put. So you can have the prior high as a first target and take bank half profits there, and then just manage the rest, and just if you have other target levels, so you can just manage it out and look for greater pippage on the second half. Now that's one strategy of trade management. Another one could be that you just say, do you know what, I'm just going to trail my stop and just see what happens. Another one could be you don't target the prior high and you actually look for look at the bigger picture and look for some bigger runs. So we're going to go through all that now. Now, I haven't even had a chance to change the slides here today because I've been so busy. Because bear in mind, I've got back at 3 AM yesterday and we're running around, and obviously I'm straight back into Ezeetrader as well. So I've not really had much time to go through these slides. So this was from when I put this together, when funny enough, I think the last round the clock trader presentation, I did this presentation. So now this is the trade that I took that day actually. So some of you were probably may have been here on that last presentation. So what we've got here is, hopefully you can see my cursor, we've got a 5-minute chart on the right hand side, then I've got for purposes of this exercise, then I've got a 15-minute chart just to the left of it, then a 30-minute chart, and then the far left we've got a 60-minute chart. Down on the bottom you can see we've got a MACD indicator, and that's quite a good little momentum indicator in fact. And as you can see at this point, we see this euro's had a nice sharp up run here on the 5-minute chart, and the MACD histogram is rising accordingly. Likewise, it's rising here. The histogram's positive on the 15-minute chart. It's also positive on the 30-minute chart, and it's also positive on the hourly chart. So we've got confluence here amongst the time frames. So we're not just blinkeredly looking at a 5-minute chart, we're looking at to see what's happening on these higher time frames as well. So we can see it's had this good run at this point. This is just an expanded view of that hourly chart. So we can see that, yep, the hourly chart was having a good run, and that you can see that MACD was all geared up and switching to the positive side. And even on the 4-hour charts, it was all geared up. One thing I do when it comes to MACD, I look at both the histogram and the signal lines as well. So the signal lines, as we can see, were well above 0. So even though on the 4-hour chart, the histogram was actually still negative at that point, it didn't really matter because the longer term trend was up. And so that was fine. So let's go back to this. Now we go back to the 5-minute time frame, and as you can see here, I've now got that RSI indicator, and you can now see that the RSI has gone above 90. My red line there, actually you can see that it's at 94 there or so. It doesn't really matter what the reading is, providing it's above 90, and that's just reflecting the move that we've had. So what I'm always looking at is, have we had a nice little run, and have we got the potential to run higher? If I just take you back to that last screen there on that 4-hour chart, we can see that actually that euro dollar ran all the way up at the time I've taken these screenshots up to 116.50. Okay, 116.50. So it had that potential to break higher. But the only reason that I knew it had that potential was because I'd just done my analysis on those bigger time frames, that the bigger time frame trend was up and it had the potential to break out. So anyway, we've got this scenario whereby the RSI is closed above 90. So what I'm now looking for is that little pullback that I talked about. And this was a trade that I took in my trading room. I don't know if any of our traders are here today, but this is a trade that we took on that day. And the euro on that day done a pullback after doing that extreme rate reading. So what I'm effectively looking at here is an extreme reading, as we call it, i.e. an RSI reading over 90, then a pullback. Now, once we get the pullback in price, We then have that potential for the euro to come up and break higher again. But firstly, we're looking for it to potentially come up to the prior closing high here. This is the closing high. And the reason I've said the closing high is important because the RSI indicator is obviously based on closing prices, not absolute highs. So closing price, that would be, if I was going to buy it down here, and this was, just the way it worked. These are what I call my bands, but it doesn't matter what you use. You could use something like an 8-period moving average or something like that if you're going to use a moving average as a pullback level from where to get long. So we've got that 8-period moving average down here. I think that's probably an 8 or a 10-period moving average on this chart. Not a bad zone to look to get long, with the first target up at this prior closing high. Like I've already said earlier on in this presentation though, you don't have to target that prior closing high. You could say, do you know what, it's not enough pips for me to really get too excited about. It's about 15 pips or whatever. So I'm actually just going to run it and look for bigger targets. So as far as targets are concerned, you can select whatever you want. I'm just giving you a setup here. So I'm giving you a setup here. I'm not necessarily giving you targets to work towards, whatever. It's something that you can go away and have a look at and then go off and test, in fact. And I always like it if people go off, if you give them a setup, say go off and test it and then amalgamate it into your style of trading and see if you can make it work with how your style is. So you could look at the sort of things that you might look at as targets rather than me just telling you everything. So the next shot takes us to what happened next. So it got up to this prior high here. Now, I hadn't, I had targeted that prior high. We'd got in down here just above 40. I think it was about 43. The first target was something like 65. So it was about 20, just over 20 pips, 22 pips, whatever, to the first target. And then, because we'd done the higher time frame analysis, we were looking for much more. So the reason we often take a first half profit at the prior high is because what often happens is you end up with a potential divergence. So at this point there's a potential divergence in play, in which case maybe it's just doing like a double top effectively and then it's going to come off. So that's one reason why you could do that, but you don't have to. If you want to just say, do you know what, when it gets up to these highs, maybe I'll move my stop up and then just see what happens after that, then that's absolutely fine. This is actually what happened a couple of hours later. This was the setup, if you can see down here. Now I've just expanded about. This was the setup as I talked about down here, and this is what happened next. Now I don't like having to do these sorts of presentations whereby you show something that's happened in history, but this was a genuine trade that we took, and it was the day that I did the last round-the-clock trader, and I put the slides together that day after having taken this trade in the morning. So. And it did run, but and also obviously this is a nice example, but it's just so happens to be the same presentation that I did last time, and it ran over 100 pips there. So it's not always going to run 100 pips by any means, but it's all about, well, how much analysis have you done to see how much further you think it might run, or do you want to just run a trading stop, or whatever your personal style is, that's fine. So nice and easy. Price goes up. If you get an extreme, then over 90, then you're waiting for a pullback to then get long, and then just manage it in whatever way you want to manage it out. Before I do go on to this slide, what I'm actually going to do is I'm going to bring up a live chart. Not a live chart. Well, this is a chart, but not live, because this is from last night actually. So I don't know if any of you were watching the markets last night as the FOMC statement was last night, and we saw this big move down on the euro dollar. So this is on a 5-minute time frame here. Big move down on the euro dollar. But as you can see, this is a nice example of the reverse, the inverse of what I've just talked about. So now, if I can get it there. Yeah, there it is. At the bottom of this bar, we can see that actually we've now closed below 10. It was at 9.69. So we've closed at below 10. So then what you'd be looking for is the reverse. So you'd be looking for a pullback to then get short. So we had a bit of a pullback here, that had this green bar. from where to then start to look to get short. Now, I didn't actually trade this one because I was looking to trade further back up here, but it was a setup as it will anyway. Now, depending on how many pips you're trying to make and everything else, that would be again down to the individual about how you'd actually go about trading it. But what I'm just showing you there is just a setup just from the recent past. That was just from yesterday, and that was on the short side. So hopefully you can get an idea of it. It's quite simple. Market moves in one direction. Price, either if it's going up, then the RSI goes above 90. Then you've got a potential trade setting up once it does a pullback. And likewise, if market's going down and the RSI goes below 10, then you're just waiting for the RSI to kink up and the price action to do a retracement to then get short. Is everyone okay on this so far? I'm happy to take any questions at the moment. Right, so let's see what we've got here. The RSI 6 is an excellent setting, Gordon's saying, to use. Used it since Charlie's last presentation here, and it really does highlight things far greater than 14 settings. It works. That's what Gordon's just said there. Fun enough. Oh yeah, and John's just put here, I tweeted you about this strategy. I used your strategy last night and took a 1-to-6 risk to reward ratio trade. These comments have just been put up. I'm not making them up. Simon will contest to that, but I'll actually take a screenshot so people can make sure people can trust what I'm saying. Here they are. So here's the 2 comments here. Gordon's just put this through. Oh, hold on a sec. You can't see that, can you? You can see this. I've taken a screenshot of it. Right, there we go. So the RSI, there we go. So we've got Gordon who's just typed this, and John's just tried this. So yeah, a 1 to 1.6. Sorry, 1 to 1.6. Okay, that John's had there. So these are the 2 comments that have just been posted there. It's nice to see. Kingsley is saying, does this setup apply to stocks and shares as well? Probably, Kingsley, but I don't trade them on an intraday basis, so you would have to go off and test it yourself. But it could well do. But the nice thing with trading on Forex is that I trade the same markets every day, so so it's easy to test because I'm only looking at, let's say, 5 currency pairs. And whereas if you're trading stocks, it could be any one of a vast universe of stocks, and it's a lot more difficult to test because how many shares or stocks do you test? You have to test 300 of them. So that's the only thing. But the essence of the strategy should still work, but it's more difficult to test. Did I say contest, Ian? Sorry, my apologies. Yes, it's because I'm actually getting distracted here. My little dog, I'm always, whenever I do these presentations, I'm left with the dog, and he's decided he wants to go out, and I'm in the middle of this presentation, and he's decided he wants to go out, and I can't let him out at the moment.
But Charlie, yes, I can attest to all these comments. Yes. I can see them coming in at the same time as you. Thank you. Thanks, Ian.
John's saying it did run longer, but he bottled it. Okay. Okay. What is the edge in this strategy? You tell me, Tina. The edge in the strategy is if you take it away and test it. So all you got to do is scroll back, put a chart together with whatever you use, scroll back the chart, and every time you see the RSI go above 90, see if it does a little pullback, and then where it goes to from there, and log it, and then start to record all of those setups, and then you'll see whether it's got an edge or not, won't you? So that's how you go about doing that. So it does require, I can show you the setup, and I can say to you, look, I use this on a regular basis, but if you want to trust in it, then you either trust my words, which is fine, but I always like it if people actually go and test something for themselves, a bit like what John said there above. So the edge will be what you find in it, because one person might say, do you know what, I trade this and I use a XYZ standard stop and I use an XYZ standard target. because you get people like that. So you'll get people saying, yeah, I trade this, I use a 15, I trade it on euro dollar, and I use a 10 pip stop, and I use a 20 pip target, and that's what I do. And you'll have someone else who will say, no, I don't do that. I trade it with using an average true range to ascertain where I'm going to place my stop. And I use an average true range or a multiple of for where my target's going to be. So you can have a single setup with many different traders trading it differently. And that's what I'm very much into, is that different traders taking trading according to their own style. So you decide on where you want to place your stop. You decide on what your edge is going to be as far as targets and stuff is concerned as well. Does that make sense? Ross is asking, where do you place your stop if you're buying an MA support? Yeah, that's a good question. Let's go back to the chart here. So take that back. Where was the setup? Yeah. I tend to, Ross, as far as stops concerned, I tend to use an eyeball version of ATR. I don't have an ATR, I don't use it, but I basically eyeball the charts and say, right, okay, I know we're into a support zone here at the moment, and I'll look at it and say, okay, I'll allow it to have some wiggle room. So what are the price bars like at the moment? Right, okay, so if I was looking at this chart, I'd probably be putting my stop a little bit below this red line. So that's what I do. But if you want to statistically look at it, and what I say to people is take it away and ascertain what your style is. So where would you place stops? You might say, well, I'm always going to put a stop below the 21 moving average, for example. Or I might put a stop the other side of a fib level. It doesn't matter. Everyone's got different styles. So you decide where you would want to put stops. But what I do is eyeball it based on the size of the price bars, and I'll say, yep, just want to give it a little bit of wiggle room, and I'll put it there. And then I'll look at the chart and say, how many pips is that? Oh, right, that's 15 pips on this occasion. Yep, good. Oh, you're saying thank you. Good. Right, Tina's asking, what are the best pairs to trade with to test? Yeah, good question. Look at your major currency pairs. So there's 7 major currency pairs. So look at those. But even of those, I mean, Kiwi dollar, do you really want to bother with that? It tends to move more outside of the UK time zone, so maybe don't bother with that. But outside of that, you could trade the others. I don't personally trade the Swiss. So what I personally trade is the euro dollar, pound dollar, dollar yen, Aussie dollar, and dollar CAD. Those are the 5 that I tend to trade. So yeah, some of the major currency pairs. But it doesn't really matter. If you like trading other currency pairs, you can test it on anything you like, on any currency pair you like. But those are the currencies that I trade it on. Yeah. Good. You're saying thanks. Sui, you're asking, is the RSI the same as the stochastic 80 top 20 bottom? It won't be exactly the same. You'll probably find a lot of the time that when RSI 6 is getting above 90, that probably the stochastic probably is above 80 at that point, but that's not the strategy. The strategy relies on that RSI, because I know that the RSI is going to kink back down when it does a pullback to then come up and potentially end up doing a divergence up here. So I'm looking to get in down here with the potential that the market has had a good run, it's got overbought, and then what happens is, okay, how many people will contest, attest to this? Sorry, I said contest again. Ian, sorry. How many people will attest to this? And that is, the market has a good run in one direction. I'm laughing, my dog's going crazy. It's always the way, isn't it? I've been in my office all afternoon and he's been sleeping. I start doing a presentation, he goes crazy. Anyway, so we've got a really good run here. And so what happens is, when you get a market going, having a good, strong run in one direction, you get traders all around the world doing what? What are traders all around the world doing? just waiting. There we go. Right, good. I'm seeing some answers come through. Right, yeah, selling. Yeah, because that's what traders do. They're always trying to do the opposite of what the market's doing. So they see a market flying up, and then they think, oh, it's gone up a lot. My stochastic indicator is overbought. I better sell it. And that so often is what happens. But what happens quite a lot of the time is when a market has a good run in one direction, in fact, it might just do a little pullback. It might just do a little pullback before going higher again. Because if you've got all those traders selling, where are they most likely to place their stop losses? Once it starts pulling back down, they're going to tuck their stops above these highs a lot of the time. So what's the market likely going to do? Want to try and take out those highs? Plus, it's got momentum with it. So usually, it's going to at least want to go and re-challenge these highs. Even if it then fails from there and then starts to roll over, usually it'll want to come back up and at least retest those highs. Because markets like to do that, don't they? Markets like to retest prior highs and they like to retest prior lows. That's what markets do. It's all coming back down to the edge. Right, okay. So let's go on to, this I took some screenshots of our live trading room actually at this point. And just to show you, this was a genuine trade. As you can see, this is it's an online trading room, and this is the software that we use. I've just taken a screenshot of it. These are all our members who are logged in at the time. And you can say, they're saying, yeah, best trade I've been in for a while, and all of that sort of stuff. And banked, re-entered banked, I'm out. Only got half an entry, banked when you did, and then out at 116. Banked half, holding up, etc., etc. So close half at 116.13, the rest at 116.50. So that looks like a good one. So yeah, it was a really good run. But it's a straightforward, very simple strategy here, a setup. But what I'm showing you is, like I said, the strategy, the setup. But you can take it away. You can apply it to whatever markets you trade. Probably, like I said, stocks is probably not quite so easy to test. But you could take it to any market and test it on that market. And then say, okay, what sort of pullback would I look for? Would it be very shallow? Would it be slightly deeper? Whatever. And then you can personalize it, because that's what's important to me, is that traders personalize their strategies. Guys, I'm so sorry. I'm going to quickly let my dog out because he's going crazy out the back and he needs to go out. I'll be 30 seconds. Bear with me.
Folks, well, just in case you were worrying, this is a pre-recorded event. Here we are. These things are live. So welcome, everybody. If you're just joining us this session, this is Charlie Burton discussing his day trading strategy as part of Round the Clock Trader. I'm Simon Campbell. I'm the host of today's event. We've got about another 10 or 15 minutes for your questions for Charlie, and he's talking about the trading room. So hope the dog's okay, Charlie. I'll hand back to you.
Yeah, thanks, Simon. Yeah, my apologies. Okay, so yeah, so that was just a proof of the trade, so to speak. There, that was the, and you can see this screenshot. That's exactly the same setup there again that we're showing. So this was the setup here after this run up. It's just in a black chart there as opposed to the white one I've just shown you. Okay. So we're using that price momentum and RSI, okay? And I've already gone through using something like a momentum indicator, something like MACD. It's quite handy to use as well, so it confirms what the price action is doing there. Looking for that pullback after a reading of 90 or above, and obviously we reverse it for shorts, so therefore it'd be a reading of 10 or lower for short trades. And if the risk-reward ratio works for the first target the trade is on, and I think that's important, that you've got to still make sure your risk-reward ratio. There's no point in saying I'm going to use a 30 pip stop and then having a 5 pip target sort of thing. So you've got to make sure the risk-reward ratio works for you as well. But like I said, this is just one of the strategies that I use within my my portfolio of strategies, so to speak, and it's a nice little sweet one, and I presented it. I know I did this last time when I was there in August, but it went down quite well, and so I thought I'd do it again, because we always have different people on these webinars as well. And like I've already said, in that particular trade, that trade became a really big runner, so it was like well over 100 pips off of what would have been probably about a 10 pip stop loss on that trade, from what I can recall. 10 pips, maybe 12 pips, something like that. So it became a really good risk-reward ratio trade on that one. But you don't always get trades like that. They don't always run like that. But it's a nice little setup, easy to backtest. So let me just go through that. Actually, no, let me just go through something else with you here, actually. Incidentally, if you do, I'm going to go back to the charts in a moment, but if anyone would be interested in 2-3 days in a live trading room, we're not going to be doing it for a while, but if you register now, then Sam, our PA, she will get in touch with you and let you know when the next event's going to be. But if you go to ezeetrader.com/round the clock, that entitles you to 2-3 days in our room. It gives you the opportunity to see what we do on a day-to-day basis. Both myself and Kim Watson are in that trading room every day, and we're analyzing the markets and trading live in front of you on a day-to-day basis. So if anyone's never done that before and you think, oh, that might appeal to me, actually I wouldn't mind having a look at that, then it's free, just your opportunity to get an idea of what we do there within our live trading room. One thing I must say, incidentally, with Ezeetrader though, is we're not all just about day trading. Although I'm doing a presentation today on day trading, we do a lot, or I do a lot, on swing trading as well, because a lot of people can't day trade, but a lot of people obviously can swing trade. But if you're interested, then there's 2-3 days there in our live trading room. Now let's go back to this chart again. So I can see some more questions coming through, so I will come back to your questions. Someone said, Gordon's asked, no, it's not Gordon, the one before Gordon. Do you use this on the DAX? Kim, I don't trade. Kim Slate, I don't trade the DAX. So, but yes, you probably could. Again, it'd be very easy to test it, and that's what I'm about to run through. So if anyone's saying, well, how do I go about testing it? Right, okay, this is what you do. So I've got a chart here. It doesn't matter what. I've got a market up here. It's on the euro dollar. The euro dollar's had a bit of a run this afternoon. Let's have a little look. Okay, it's having a little run at the moment. This is the euro dollar live right now. And it's having a little run here at the moment. Now, if the euro dollar was to carry on running, we might actually see the RSI get above 90. So it could actually even happen this afternoon. So, but anyway, all you do is you would take a market, put a chart up. If it's a 5-minute chart, or it doesn't, like I said, this would work on an hourly chart as well. So the same philosophy is there. If you're looking for an RSI reading of above 90 or below 10 on an hourly chart, then you can do that as well. You can backtest it on any time frame you like. So you'd scroll back your charts, and then what you would do is you would say, okay, right, oh look, there's a reading here at this point of below 10. Right, okay, how far did it pull back? So you would log how far it pulled back, and then say, okay, right, it only pulled back X amount of pips from where it's set up, from where the RSI hit below 10. Okay, so it pulled back X amount of pips. Then log how far it ran before it stopped making any new lows. So you would log, okay, that was, I think, as low as it went. Don't think it came any lower today. So you would log then how far it ran. Then you're starting to build a picture. You don't have to do anything about where you would enter at this stage or anything else. Just start logging the information. You can then, once you've collated enough information across enough setups, you could then say, right, okay, according to my information from my backtests, actually a pullback to XYZ level is the optimum level to look for. And actually, running it from a running it perspective, then there's usually X amount in it relative to the stop loss that I would employ. So you would just keep on scrolling back the charts, looking for another instance. Okay, here's an instance here where we had an RSI reading above 90. So it's done a pullback here, and then it's come back up. But as you can see on this occasion, all it's done is come up to the closing price. Remember I talked about the closing price. So that's where the sort of thing where might look at that and say, okay, half profits banked there, because the potential is always for it to roll over, you see. So you might log that, but you might say, actually, no, I don't want to take half profits. So in which case you might say, yeah, it came back down, and I would have just got stopped out on that occasion. So you would log that, and so on and so forth. So you just keep on scrolling back the charts till you get this RSI extreme. So we've got an extreme up here, we've done this pullback, and then a nice run higher again. So there's another one, and you just keep doing it. It's quite simple. You just got to take some time and get a notepad and pen or a spreadsheet or whatever, and start logging all of this information when you get these RSI extremes. And so, and again, I'm only looking at this with a 5-minute chart view at the moment. Remember, when I'm actually trading this, I'm also coupling it up with what's going on the hourly charts. So have I got momentum not only with this RSI reading, but have I got momentum on that hourly chart? That's an important factor. Have I got momentum on the hourly chart when this setup occurs? So again, if I was back testing this, I can pretty much see that momentum wouldn't be there on the hourly chart. Why? Because I can see that price has actually been coming down prior to this little run up. So it probably wouldn't, very much unlikely to be any momentum there. Something else to factor in when you're back testing, I've just noticed down here, this was at 9 o'clock at night. Would you be trading at 9 o'clock at night? So there's no point logging trades which you're never going to take if you're never going to be trading at 9 o'clock at night. So all these little things you can add into your back test, but very quickly you can start to compile information. And you say, well, okay, there's no momentum on this one, plus it was 9 o'clock at night, so that wouldn't qualify anyway. But there'll be other ones, so we can find another. Okay, here we go. So we've got, was that an extreme there? Did that get above 90? Not quite, got to 89, but this one got to 90. Okay, did a very shallow pullback. Okay, you would log it and how much it pulled back, and you can see it went higher. Probably on the hourly charts, because it's been consolidating, there probably would have been momentum if I was looking at an hourly chart at that point. So when you're back testing, I would have the 5-minute chart up, and I would also have an hourly chart up. Okay, so I'd have both, so I can make sure that the hourly chart was in line with what was going on the 5-minute chart, and so on and so on and so on. So here's another one here. It looks like it did above 90 there. Done a nice pullback and then came back up again. So it was a nice deeper pullback on that one. So there you go. I've just given you some ideas there for what you could do. Oh, I see the euro while I was just doing that had gone higher. Let's have a look, see if it. Oh no, the RSI's not quite moving fast enough at the moment. The price is moving, but I don't know if the RSI is going to get up there. It might do. It's at 82 at the moment, so it's still going to take it maybe a little bit longer. But as you can see, this may well in the next maybe 15 minutes or so get above 90, because this is a live chart here, as you can see. Okay, right, let's go back to questions. But like I said, this is just one strategy that we use, and we have a number of different strategies. And if you want to see us in action, then just go to ezeetrader.com/round the clock, and that will at least get you registered for the next time we do the free access to our trading room. Okay, what else have we got here from a question perspective? Any views on the Dow? Not at the moment. That's not what I'm here to do today, Gordon. I think the next person is doing some analysis on some markets, but that's not my job here today to do analysis on the markets particularly. John saying, think you said you use this strategy on longer time frames. Do you tweak any of the settings when using on long time frames? I just did a quick scan over the majors, and not often RSI gets above 90 or 10 on dailies. Oh, on the daily charts? Well, no, you'd have to go back over probably several years, John, to test it on daily charts. I tend to not look at it actually that much on daily charts, but actually let's as you've talked about higher time frames, which I know we're comfortable with time at the moment, so in fact if I take this chart over to the S&P 500, let me just do that. This is actually the S&P futures. Oops, that's not the S&P, is it? The S&P futures, and on the S&P I think it's on the weekly chart. Let's have a look. No, it's not on the weekly, it's on the monthly chart. There we go. So on the S&P on the monthly chart at the moment, it's actually doing an RSI reading of above 90. So I'm well aware that the S&P as and when it does a pullback, it could just be a pullback before then coming back up, at least to retest that high. But that's on a monthly time frame. That could take months to set up. But anyway, so yes, it does happen on other time frames. But of course, the higher the time frame you go to, then the fewer the occasions it happens. This is an S&P chart. We can see it happened on the daily charts back down here, and then carried on going higher. So it will happen, but you just won't see it as often. Your live trading room, Capil, yeah, the whole point of our live trading room, you're saying, are we able to see you taking live trades? Yeah, that's the whole point of it. It's live, so we take live trades as we go through the day, and you see me taking trades on a real account, clicking the buttons, and you see my P&Ls and all of that. So yes, you see that all the time, and I'm always in positions. I'm always in trades, and whether if I'm in day trades or swing trades, so I'm always in some sort of trades or other. So yes, it's very much live. And Auntie's asking what time does the live trading room open? It opens. You can log in at any time of the day, but we come in at 7:30 in the morning, and then we're generally there until about 4 p.m. in the afternoon. So some days Kim runs the morning sessions and I do the afternoon sessions, and then we also do we do it the other way around as well, where I'll be doing, there's a couple of days of the week that I do the morning sessions and then Kim does the afternoons. Well, yeah, it's a long day, yeah, exactly, but we cover all of that that period, and so between the two of us. So today I was doing the afternoon session, so yeah, so yeah, there's a huge amount of value there. And the important thing with that live trading room is it's interaction. I said right at the beginning of today's presentation that the one thing that I struggled with when I first started trading live, full time, should I say, after quitting my career back in 2001, was a lack of interaction. And by having something like a live trading room like this, you've got a community. You're part of a community of yourselves and other traders as well. I'm getting asked what broker I'd recommend to trade. Sui, I don't really want to answer that on this. This is more of a public webinar, so it's not the sort of question I really want to answer in this environment. Sorry, because I don't want to upset anybody else who might be recommending a brokers or whatever, or using certain brokers. So I think in the context of today's presentation, if you ask me behind closed doors, then I'll answer you that question. If you come into our live trading room for 2-3 days, then I'm certainly happy to do it, because then we're behind closed doors. But I don't think it's my place to do that here today. Any other questions here at the moment? We've got probably a couple of more minutes if anyone's got any more questions. Okay, you're saying thanks. So that's the strategy. It's fairly straightforward, like I keep saying, and fairly straightforward to test as well. Nice to see a couple of people who have actually used this. Like John said at the beginning of the presentation, and I think it was Gordon has said as well. So they were here the last month and they've subsequently used it, and that's always nice, because a lot of the time you do a presentation, I won't beat about the bush. I fully expect probably less than 10% of people in attendance here today to actually do anything with this, because that's just what happens. So that's why I don't mind giving a presentation, a strategy away a lot of the time, because I know that the majority of people will do nothing with it. Those people that actually do and take it away and think, I'm going to test this, I'm going to trade it, I'm going to see how it works, great. But usually it's less than 10% of the people that attend that actually do anything with these things. I've probably raised a red rag to a bull now, so probably a load of people will be saying, no, I'm actually going to take this away and test it. Great, brilliant. How do you sign up for the free 2 days? Okay, if you look at the screen here, it says ezeetrader.com/round the clock. So if you go to ezeetrader.com/round the clock, it'll bring you up a web page which will look like this. Hold on. Okay, here it is. Right, I'm just going to bring it up. And all it'll do is just bring up a web page like this, and it says join us for 2 free days. And you can just put your names in, and away you go. Just click for it there. So that's all. That's what it brings up. So nice and easy. Just a form to sign up. Let's have a look. What else have we got here? Written it up into your. So John's actually already written it into his trading plan. Great, and he's saying thanks for that. He said it's working well for me. That's very kind of you, John. I will pay you your £10 fee shortly. What else have we got? How many strategies do you use? Yeah, good question, Auntie. How many strategies? I do employ a number of different strategies because I think you need to have different strategies for different market conditions. You can't be a one-trick pony and just say I just trade a certain kind of strategy. But as with all of my strategies, they're sort of overlaps of the same. So they're just slight variances on a theme. So a lot of the time, for example, I like to buy pullbacks within a trend. So I mean, how many different ways can you buy a pullback within a trend? You know, so it's just how you go about approaching that. And then I also have some sort of counter trend type of strategies as well. But everything that I do really comes from a top-down analysis. So whatever I trade, it's always based on multiple time frame analysis. So, but yes, the actual setups. The setups are the excuses to get in based on the analysis. Okay, so the analysis comes first. That's it. That's looking at the bigger picture. So if I'm intraday trading, I want to be checking what the hourly charts and the 4-hourly charts are doing, maybe even up to the daily charts. I want to get that idea of the bigger picture first. Then I'll take it all the way down and find a setup based on the 5-minute charts. But that's all based on the much higher time frames. Do you avoid news or trade through news? Good question, Veronica. Generally, as a general rule, I'll avoid news. So I won't get into a trade ahead of a piece of news. No, not on an intraday basis. If I'm in swing trades, it makes no difference. I don't care about news. But some pieces of news aren't big market movers anyway. So I'm not going to worry too much if I've got into a trade in the morning and there's a piece of news coming out in the afternoon, but it's not a major market mover. I won't just come out then. But if it is a bigger market mover, something like an inflation report or something like that, then I might have to take a decision and come out. So definitely we have to respect the news, yes. Well, I don't know how Bruce has done this, but he said, whilst listening to you, I've used the strategy on 2 trades and made 2 small profits. How have you done that in the time I've done this presentation? What markets were these on, Simon?
I think it's Bruce. Bruce has said this.
Oh, sorry, did I say Simon? Sorry. Bruce, what markets are these on? So I'm so distracted today, Simon. I was looking at, as I said, Simon, I was looking at someone else asking a question to you. So,
isn't that great? Oh, Bruce, I'm glad it's working for you. It's really good.
Yeah, and I'm conscious of time, Simon. I'm well aware that we've probably only got maybe 1 minute. So he said both on the dollar Swiss. Okay, so he's traded the dollar Swiss this afternoon using that setup. So I'm going to try very quickly to bring up the dollar Swiss. Was this on like a 2-minute chart or something, Simon? Bruce, sorry. God, doing it again.
That's okay. Just to be absolutely clear, Bruce and I are 2 different people.
All right. 5-minute chart. Okay, let's quickly just take a chart to take this to the 5-minute chart of the dollar Swiss. Okay. All right. Okay. I don't actually have an extreme on my 5-minute chart, but some charting softwares, you know, the way that they're computed can be slightly different to others. So I'm sure on Bruce's he's got that, but it didn't quite get there on mine. But it could well be that maybe it has on yours, Simon, Bruce. But every time I look at that screen, I'm seeing Simon. Yeah, it could well be. But good for you anyway. You're starting to use it, so lovely to hear. On that basis, if anyone wants to see more of what we do, come and see us in our live trading room for 2 free days. It'll be, I don't know when it will be yet, but Sam, our PA, will let you know. All you need to do is go to the sign up link there. On that basis, I think, Simon, I've just about
Fantastic.
Right, time.
Charlie, I don't think it gets better than that. Within the space of 60 minutes to teaching a strategy and people applying it and profiting from it,
Yeah.
all within a 60-minute window. I think that's got to be a first. Well done. And thank you very much indeed for joining us again. That does bring us up to our 5 p.m. slot, so we have another speaker waiting. The links in there are to the Ezeetrader /round the clock are in the chat box. And of course, we'll follow these up with the follow-up email that we get. You will all get a recording of this presentation. Will, I see you've just come in, so you'll get a recording of this presentation later on this evening. You'll be able to go back and watch that again. So, Charlie, thank you very much again, and hopefully we can have you back on again in the future. That was absolutely fantastic. Much appreciated.
Thanks, Simon.